The UK currently has around 18 gigawatts of installed solar capacity, but needs to scale that to around 50 gigawatts by 2030. NESF itself has deployed around 10% of the UK's ground-mounted solar, and it's really well positioned to play a significant role in helping the government to achieve the target that we've set out as a country.
Hello, you're watching Proactive. Joining me is NextEnergy Solar Fund Investment Director and UK Legal Counsel, Stephen Rosser. Stephen, very good to speak with you. There have been some changes to the NESF Board of Directors. Could you talk us through this, please?
Of course, Stephen. Great to be here again. As many of you will already know, Helen May stepped down as chairwoman of NextEnergy Solar Fund recently to pursue some other interests. She's also stepping down from her role as Senior Independent Director at SSE at their upcoming AGM, and has recently been elected as the Honorary President of her local agricultural show. So a super exciting new chapter beginning for her. Helen and the board worked very carefully over the last few years to put the board on a strong footing when it comes to succession. And in line with that plan, Paul LePage, who was the Senior Independent Director for the company, has been elected as the interim chairman. We have full confidence in Paul. He brings extensive experience, really deep sector knowledge, and a real enthusiasm to guide NextEnergy Solar Fund into its next phase. Josephine Bush has also been elected as the Senior Independent Director. Naturally, we all wish Helen the very best of luck with her new projects.
Stephen, can you tell us more about why you think Paul is such a fitting interim chair?
Paul's played a really key role on the board as Senior Independent Director so far. He's provided really thoughtful guidance to the chair and the board, and served as a valuable intermediary between the directors and our shareholders over his tenure so far. He also brings 12 years of experience in the solar industry and was previously the audit committee chair at Bluefield Solar Income Fund for about a decade. Since he joined in 2023, he's really hit the ground running, been meeting with shareholders, been coordinating with us as the investment advisor, and actively steering the fund towards our next growth phase. So he's really well placed to take on his new responsibilities as interim chair.
Stephen, NextEnergy Solar Fund's board announced a maintained dividend target of 8.43 pence for the full year to 2026. Can you tell us more about that?
Yes, of course. The board confirmed the 12th annual dividend target for NextEnergy Solar Fund at 8.43 pence, as you say, for the financial year ending March 2026. So that translates to a yield of around 12%, which remains amongst the highest in the FTSE 250 as at May 2025. The dividend target for the year is forecast to be covered with a range of 1.1 to 1.3 times, and that's coverage by earnings post-debt amortization. The board's decision was informed by the high degree of visibility that we have of the company's revenues, and also takes into account the importance of balanced capital allocation as we move forward into the next phase of the company's growth. Since inception, NextEnergy Solar Fund has declared and paid around £395 million in dividends, all of which has been covered by operational cash flows from the assets in the portfolio.
Moving on to your recent fourth quarter NAV and operational updates, can you take us through some of the highlights, please?
Certainly. We saw a slight decline in the net asset value to 547.4 million this quarter. But overall, it was a pretty steady period for the platform. Despite less than ideal generating conditions for the full year, which were caused by weather and network outages, as you've heard us talk about, we achieved our target dividend of 8.43p for the full year 2025, and that was 1.1 times cash covered. The portfolio itself continues to operate in line with budget and in line with our expectations. As a reminder, NextEnergy Solar Fund has 101 operating assets in the portfolio, with a total installed capacity of 937 megawatts. That's enough to power over 300,000 UK homes a year with clean, renewable electricity. In addition, during the period, we also consolidated short-term debt into a single revolving credit facility at a market-leading rate of 120 basis points over SONIA. So that helps to reduce our financing costs. We also continue to focus on paying down long-term debt, which amortizes in line with the remaining life of the subsidized assets. And the company also bought back 5 million shares for about £3.4 million during the period. Looking forward, the outlook is really positive. It certainly helps that since March, the UK has experienced more solar irradiation this year than the entire summer last year. So the fundamentals are really strong, and we're excited for the months ahead.
Stephen, just going back to the NAV, what affects the NAV of NESF?
The NAV is calculated using a discounted cash flow model, so that's influenced by several moving parts. It can fluctuate each quarter depending on market conditions and how the assumptions move from quarter to quarter. Key drivers in the NAV include power curves, where we use a blended average from 4 leading market consultants. The discount rate, where we currently apply a weighted average discount rate of 8% across the portfolio. And inflation, for which we rely on independent forecasts from HM Treasury and long-term implied rates from the Bank of England. We're very careful to minimise any management view in the NAV, relying on external independent inputs. We do provide a full breakdown of the NAV in our reporting to ensure it's robust, transparent, and importantly, in line with best practices.
And what actions are you taking to narrow the discount, Stephen?
We are actively working on tackling the discount through several different avenues. The company, as most investors will know, has a capital recycling program, the final phase of which, phase 4, is for 100 megawatts of operational solar assets. That remains in a competitive process. It has been moving more slowly than we'd hoped, particularly as the M&A markets react and adapt to things like tariff uncertainties and other geopolitical factors, which can be a bit disruptive. But we continue on track to complete those in due course. The board has also introduced a share buyback program of up to £20 million. £11 million worth of shares have been purchased to date, and those are being held in Treasury at the moment. We are continuing to invest in the health of the portfolio to maximise operational performance. So when the weather is favourable, like we've seen this spring, we can really harness all of that. And we're actively pursuing opportunities to drive NAV growth that we expect to both maximise shareholder value and also provide a long-term growth trajectory for the platform. So we'll be really excited to update investors at the appropriate time there.
What does the future market landscape look like for solar and energy storage given CP30?
It's full of opportunities for NESF. We're seeing macro tailwinds, so interest rates are expected to fall further from the current 4.25%. And the current Labour government remains really strongly supportive of clean energy. CP30, the UK's Clean Power 2030 plan, is particularly exciting for NESF. The UK currently has around 18 gigawatts of installed solar capacity, but needs to scale that to around 50 gigawatts by 2030. NESF itself has deployed around 10% of the UK's ground-mounted solar, and it's really well positioned to play a significant role in helping the government to achieve the target that we've set out as a country. We expect that there'll be a number of opportunities that emerge from the ongoing work to manage grid queues, for example, and we're really focused on positioning the platform to be able to capitalise on that over the months ahead.
Stephen, what differentiates NESF from its peers? Why should investors look at the fund?
I think that's really about the compelling value that NESF offers on multiple fronts. The first thing I'd say is the current share price discount to the NAV doesn't reflect the underlying value of the assets in the portfolio, all of which continue to perform in line with expectations. So that presents a really strong opportunity for capital upside when market conditions normalise, and certainly as we bring through the ideas we have to drive the NAV. The fund itself is also delivering a high dividend yield, which is expected to be cash covered for the 12th year running. NESF is managed by NextEnergy Capital, which is part of the broader NextEnergy group. And that's really important because as a group, we've deployed capital in over 530 assets and have access to around 400 solar and storage professionals globally. There's nobody better placed to really drive the performance that we need to see. So NextEnergy Solar Fund also has the capability to invest internationally via vehicles like NextPower 3, where we've co-invested alongside blue chip institutional investors to drive value. And our ESG credentials are also really strong. We're an Article 9 fund and have avoided over 2,700 kilotons of CO2 emissions since inception.
Stephen, what's next for NESF?
So the board of NESF and we as the manager remain really focused on maximising shareholder value, narrowing the discount and unlocking the growth in alignment with our shareholders. We're going to focus on, or continue to focus on doing that through a few things. The first is reliable cash covered dividends, such as the dividend target declared for this financial year at 8.43 pence, which, as I mentioned, we expect to be 1.1 to 1.3 times cash covered from earnings post amortization of debt. We will continue to pay down long-term and short-term debt, and we'll continue to optimize our operational portfolio and invest in the health of the assets to really harness the opportunity that exists on the system right now. And as I mentioned, we are focused on unlocking accretive growth opportunities through our secured development pipeline, where there's minimal capital outlay up front, and ensuring strong long-term platform growth by positioning to unlock some of the opportunities that we expect to come through CP30. Our full year results and presentation will be out on the 16th of June, and we will be looking, of course, forward to bringing investors through our full year results. And the company is always open to dialogue with all of the investors, so do please reach out to investor relations team if anybody's got any queries.
Stephen, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
Thank you.